Hi everyone, this is Rob Roy, and welcome to the Elliott Wave Elite U.S. Market Update. I'm sure everyone is well aware of what's going on in the U.S. markets even before I show you the charts. But one thing that's very interesting that I wanted to chat about, actually a couple things on this chart of the SPX, again the cash index for the S&P 500, is as you know we've been in this period of ABCs and we've illustrated the zigzag patterns. I'm going to go into that in a bit more detail here in a second. But before, I wanted to put the main Elliott wave count on there and show you what has occurred with this relabeling of the chart. With now we have a primary 1, 2, 3, 4, and 5 wave to the downside. Now we've been talking about zigzag patterns, corrective patterns. So we've had a zigzag and a flat, and we've moved into a new zigzag pattern. And I think that's why I wanted to highlight this because you know that if you've been listening to these recordings over the last year or so, we put an awful lot of focus in on these corrective patterns. The zigzags, they're shorter, they're only 3 waves versus the major 5-wave pattern. And instead of using the 5-wave pattern for the majority of the time as the primary trend, I tend to look at the shorter term. And in this case, that's turned out to be a precursor of what's happened in the 5-wave trend, where we saw the Elliott wave downside zigzag pattern. They occur a lot in wave 3s, which is exactly what happened here in October. And then we've got a very classic with the wave 4 retracing to right at that 61.8% fib retracement level, and we've extended in the wave 5 down to 85%. So all of this stuff is tied together. And I think that's why I spend so much time focusing on these corrective patterns, is they tend to be shorter term, and they also can be a good forecaster of where we're going in the bigger trend. Now the wave 3s, obviously being a very strong pattern, when you're in a wave 3, you can utilize that to then look for zigzag patterns within the wave 3. So I don't want to make it sound like the zigzags are always leading the wave 5s. It's not like that, but it happens a lot. And it's enough, in my opinion, to pay attention to. So I'm going to turn the primary pattern off and then break it down into the smaller patterns as we just talked about. Remind you of what we've looked at before. We had this zigzag pattern here that went to the downside. We were unsure if that was a complex A of a larger zigzag pattern. We now know everything about what this was. This was the zigzag pattern within a larger wave 3, and then we went into the flat for the wave 4 correction, which again is all very classic. So labeling this all properly, we have this A, B, C in the zigzag pattern, and then we went through the flat, which I'll label as well. And then I also want to spend time focusing on where we are now, which is obviously the most important thing. What's going on now, where are we likely to go from here? And so here was the correction pattern in that flat, which ended almost about as perfectly as you could ask for with a doji at the top of that. So that was our zigzag pattern to the downside, and then here was our flat. And then I'm going to spread the bars out a little bit to give you a clearer picture of where we are now with the market, and we are in another zigzag pattern within the wave 5. So let's go ahead and show you what I'm talking about. So here we had this impulse move to the downside. It was a very quick one, but that's exactly what it was. And so we correct right to that 50% level. Short-lived, but it was a correction right to that 50% bar. So boom, right there. That was our B wave correction. And we've already started the C wave to the downside. And when we look at the forecasted C wave, look at that. Dead on the 100% level. So a perfectly completed zigzag pattern to the downside, and we were already talking about that impulse A wave in last week's pattern. Not expecting the entire pattern to complete itself within a week, but hey, it's a good thing when it does. And we did have a bearish alert on the SPY. It was a put debit spread. Remember, we don't do butterflies to the downside, and that was a 3-day trade that we had a huge return, nearly 100% in a 3-day period because of the quickness of this move down in that wave C. So here is the fully labeled Elliott wave pattern, and I'm actually going to go ahead and write these things in here as well. This was a zigzag. Over here was the completed flat. And then down here, a further completed zigzag pattern. Now what we need to figure out is where do we go from here? So we hit the 100% extension. It's a completed pattern. Are we going to get an extended C wave and extended wave 5? Because remember, when we put the major pattern back on, we're in the wave 5, and it's been an 80%, 85% extension, so we could go further on this extension, and we could go further on the C wave of the zigzag. The market's going to tell us what to do. We may find some support here. We have the Fed meeting coming up on Wednesday, which is a highly watched Fed meeting. Everybody's trying to figure out, is the Federal Reserve going to cave to political pressure? Are they still going to go ahead and raise rates and then pause? Are they still going to stick to their guns of forecasting more rate hikes next year? I mean, this is one of the biggest unknown Fed meetings in a long, long time. It's been pretty telegraphed what they're going to be doing in the past, but now we don't know. So at this 100% extension, could we bounce back up? Normally, if you go down to an extended level, I'm sure you're aware of this by now, hopefully you are if you've been listening, you test the previous fib level first. So we would likely move back up to that 2600 level and then come back down. And so we took off our put spread when we hit that 100% extension. So now we come down here and we can rebound back to the upside, or excuse me, we can rebound back to the upside before we come down here to the 161.8%. Now that doesn't have to happen. It's just a common practice that normally you'd go back and test that previous level before extending down to the new one. So it's going to be fascinating to watch and see how this plays out. But boy, what absolute classic, perfect Elliott wave patterning this is. And if you would have been following this and using it in your trading, then you've been one of the few that's been really enjoying this downward move, where I'm sure it's been inflicting a lot of pain in people's retirement accounts, etc. Looking at the SPY to bring volume into the mix, we had big volume in that big move down yesterday, which may help it to bounce a little bit, but it's still not, we still haven't, in my opinion, seen that massive sell-off, the spike in fear. I'll show you the VIX here in a second, and where we just get that, I've been calling it a cathartic sell-off, where it's just panic sets in, everybody dumps stocks left and right, and then that's your bottom. Again, doesn't have to happen. It's just likely. A lot of people are looking for it, which that part makes me a little bit less sure that it will happen, but it still is the normal course of trading. So here when we look at our VIX, you can see that we have certainly spiked up, but nothing extraordinary. Be looking for a spike up in the 40 range for it to show that kind of fear. Right now we just have elevated volatility, and that's really not the type of a spike in fear that I think marks the bottom of a market. But again, we'll see how it plays off. But right now we can see that we came down, tested that upper trend line of the breakout of the VIX, and so it looks like volatility is going to remain elevated for a while, and we'll see if I get that big spike that I'm looking for. Following along in our case studies with MasterCard, the filling of the gap is underway. Remember, I had mentioned that we had this nice move up, which looked like maybe we were off on the wave 5, but I was nervous about these gaps because gaps get filled, and so it looks like the market wants to come down and fill that gap. It's almost filled. It's not quite. It's very close to the low coming and taking out this high to close that gap. And then MasterCard at that point in time could be free to move back to the upside. It's just a frustrating thing when those gaps occur, but it's part of trading, and realizing that those gaps get filled quite often is important to factor into your trading. We had shown that Pinnacle PNW had been outperforming the market greatly over the past 2 weeks with this craziness that's occurred here in the market. We had a really nice move to the upside, and we were stopped out yesterday of our butterfly because we were protecting the gains as we were marching up in this butterfly pattern. We were preserving our rolling up our mental stops. Don't do physical stops because you just tend to get stopped out far more often that way. But in the trading plan, if we broke this trend here that we've had, this nice uptrend, beautiful 45-degree uptrend, and you close the position out, and that's what we did. So with a butterfly, it wasn't a huge gain, but it was a small gain, and small gains are still gains. Same thing occurred here with OGS, moving to the upside. Again, another one that, as you're aware, was greatly outperforming the markets, but they sold everything yesterday when we moved down to that 5. So there was a lot of selling yesterday, just still wasn't that panic variety. So another one with that great 45-degree angle uptrend that's broken. You exit your position. Pardon me. So another really nice gain, even though it was a smaller gain, still a gain. Apologize for the voice. And then last but not least, the newest case study that I want to look at for this week on Texas Roadhouse. You can see this huge area of support right down here at 60. At the beginning of the year, it was resistance. Then it acted as support back in May. Very classic. Tested it again at the end of July. Tested it again at the end of October. And now we're back down here. And we have an amazing pattern of lower highs. Huge descending triangle here. We're going to go out to March on this one, give it plenty of time to move because it's such a big pattern. It doesn't have to take that long, but sometimes when you have these huge triangles, they move a little bit slower on the breakout. So we want to give it plenty of time to move, but it's a great, great pattern. So this is going to be one of our strangles, the delta strangles that we use with the 25 to 30 deltas. And so looks like this could be a big, big mover once it decides to break out. So all eyes on the Fed meeting this week. Going to be very interesting to see what they do. Hope you've had a wonderful week, and we'll be back to talk to you again next week. Take care, everybody.